following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tosaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block. We are, of course, your bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as from this here Options Insider Radio Network. And if you haven't had a chance to check it out yet, folks, I encourage you, if you like this show and you're curious about the tech that underlies all of your trading, the tech that drives all the stuff we talk about here on this program, the hardcore technology that really drives and propels the derivatives markets, then we have a new program that is right up your alley. It is called Trading Tech Talk. You can find it on our website and iTunes, all the fine places you find this fine program right here. I encourage you. Check it out. Trading Tech Talk. I think you're going to like it. And joining me on the program today is, well, a couple of people, but first off, most of them are still running around getting all their ducks in a row given the crazy day that we had in the market today. So we're going to start off with the man who's probably closest in terms of proximity, the man also with the fanciest of hats, none other than the Viceroy himself, one Alex Jacobson from Options Express. Alex, welcome back to the show, sir.
Hey, Mark, it's good to be here today, and a lot of news today, a lot going on in the market today.
Yeah, a few things to chew over here on the old program, so it should be fun.
Yeah, crazy day.
Yes, listeners may recognize that voice. That is also from someone who hasn't been on this show in quite a while, but he used to be on every now and then. None other than Mr. Mark Sebastian, formerly just of Option Pit, but now of Option Pit and Swan Wealth Advisors. He's doing dual duty over there. Mr. Sebastian, welcome back to the program, sir.
Hey, thanks for having me. You know, I'm always a fan of doing dual duty. That's what I'm known for.
Yes. Wasn't that your college nickname? Maybe high school?
They used to call me large duty, not dual duty.
And listeners, if you want to get your weekly Sebastian fix, then tune into the recently revamped, relaunched Volatility Views program. It's a fun one. We've had some good episodes coming up lately. And in fact, the most recent one went out this morning, and we are recording this today, Monday, February 3rd, and a lot of stuff cooking in today's markets. So let's get right into it. Let's dive right on into the Trading Block.
The Trading Block.
All right, those bells mean it is time once again for the Trading Block, the portion of the program where we break down the day's worth of action and activity across the markets. And it was a bit of a sell-off, a wee bit of a sell-off today in the markets. Pretty much red across the board. I'm looking at my watch list here, which is pretty extensive, and I see only a handful flickering glimpses of green throughout the entire list of series. It was just a slaughter today. The S&P down over 2%, 2.3%. It ended the day down about 40, nearly 41 handles to 1741. The Dow down a little bit less, only 2.1%, or about 326 handles to 15,372. And the NASDAQ leading the charge to the downside, down over 2.5%, 2.6%, or 107 handles to 39.96. Just a bloodbath, as you might expect. VIX cash taking a bit of a tick up today. In fact, breaking through the 20 handle for the first time in a while. The first time, I believe, since back in October of last year. So it's been a good couple of months since we've seen VIX last in this range, and it kind of it throws to the wayside all of the collective predictions of everyone pretty much saying that the market's going to have to take a nice, easy, gentle drift down into single-digit volatility. Well, that certainly is not the case. Mr. Sebastian, what, if anything, really caught your eye in today's activity? There was certainly a lot of it.
And Alex, stop me if you disagree with me, but don't you feel like the VIX should have been up more today? I mean, we're off 41 handles. It's the biggest move in what, 3 years? Something like that, Mark? When was the last time we moved down 41 bucks?
It's been quite some time. I'll have to pull up the chart, but it's been a substantial period of time. Let's put it that way.
Yeah. And yet the VIX is up 2.8 points. 21, that's it? That's all we can pull together. And I don't get it. And, you know, I spent the day kind of looking at Swan. We were kind of starting to put our toe in the water here, and we're looking for people interested in buying puts. Not a soul. Not a soul. I mean, there is no paper. Now, where we did see some action, VIX volatility raised, so they were buying some VIX options. But upside actually was getting slaughtered, which makes me think that we saw a lot of people doing the 1x2 spread. So they're buying kind of at the money VIX trades, selling out of the money VIX calls. And in the S&Ps, I don't think there was a lot of activity at all in puts. I'm just not sure, you know, what's going on. I think we're forming some sort of bottom here.
You know, I'm glad you brought that up because I was mulling that over today as well when I was watching the intraday developments. You know, as is my wont over here, I'm usually running around doing my 8 different things, but I'm always trying to keep a handle on what's going on in the markets as well. And I was just I was stunned to see the breadth of the sell-off, and then B, the fact that I think at the time, you know, probably a little bit around 1 o'clock Central or so, VIX was barely over 20. It had just kind of nudged north. So I was starting to dig into some of the paper flow as well to say, hey, what is really going on here? Because you're right, I'm in the same camp. I would expect, you know, we've seen far less dramatic sell-offs cause far more dramatic results from a VIX cash perspective in the past.
Yeah, I mean, there's nothing. I mean, the futures got some movement. You know, we've got a nice contango, which is one of the few, you know, VIX futures, not VIX cash. VIX futures in a backwardation like they're in right now is one of the few things we know statistically points toward a negative market the following day. But, you know, I just don't see a lot of how much more follow-through we got. You know, why weren't we getting any reaction out of VIX? Why? Why did nothing happen? I mean, if, you know, like, let's put things in perspective. All right, so let's go to the SPX and let's look at VIX. How much was the SPX down on that really bad day? It was down. You know, when we really tanked on the was it the 8th that we took that huge leg down? We dropped from 1,200 to 1120-ish. So we dropped, what is that? Like 70 points, right? But obviously a lower market. So 80, let's just say 80 divided by 1,200. So we moved, well, it was 6%. Today was 2 1/3. But the VIX was up 16 points. 16 points. And we didn't get anything like that today. We got 2. We got 2 points.
Yeah, I'm even digging here into the VXST. That is extensively designed to capture days just like this. Granted, it's not a tradable product yet. That's coming soon. But even the index is still disseminated and the values are calculated. And it performed a little bit more dramatically, nearly 2x the move we saw in just the VIX cash. But it was only about 4.5 handles.
It's at 23 and change.
Yeah.
Where's the fear? Where is the fear?
Yeah, this just screams that people aren't really buying this market, literally and figuratively. At least buying the sell-off anyway, I should say.
Nobody believes it. I mean, and it's crazy. I don't know, Alex. What do you? Why, Alex?
Why? Because none of us believe. ISM numbers spook people. ISM is probably, in my view, one of the 2 or 3 best indicators, and I think the ISM numbers spooked people this morning. Plus, you're going to hit the debt ceiling on Friday, Monday, and there's a lot of stuff out there to spook people. Look at the volume in VIX today. I mean, I saw a news flash up here around a half hour before the close that there was record volume in VIX. I think the old volume was, I'm going to get this wrong, 1,700,000 or 1,800,000, and today was going to be the record day. Today's going to be the record day, I think, for a lot of indicators. And I can tell you at the open this morning, in the e-commerce community in general, there wasn't enough capacity. I mean, unfortunately this morning, everybody, all our competitors, the phones were just ringing away. You had just a cascade of selling at the opening. And to your point, though, Mark, I don't know what changed. What was different from Friday's close to Monday's opening, other than the ISM number. But the ISM number is important. I mean, you got auto earnings. The American automakers didn't do well, but that was written off as
the yen got destroyed today.
Yeah, but so I think that's the answer to your question. I think the perception of risk changed today, and a lot of it changed at the opening. Look at the 10-year. A month ago, we would have all bet the 10-year would have been
3.5,
330. Yeah, and we were scared of 330, 340. The realized vol in the 10-year today was bigger than the realized vol in the S&P. So you did have some flight to quality. You did have money. I mean, it's a convergence of things. You clearly
so then why did the VIX underperform so much?
Don't know.
That's the screwy part that's throwing me for a loop. Why isn't the VIX up 5 or 6 today?
Yeah, it should have been up. I think I've talked about this. We have a client who trades the ratio of the VIX to the S&P, and his benchmark is the over/under is 10-1. So 10-1 today would have been a probably twice the move in the VIX that you got. But I don't know. I don't know why VIX quote unquote underperformed today, because there was a run for the exits at the opening.
Yeah, there was, but then it was interesting. Last week we saw VIX rallying while traders sold off VIX options. Today we see VIX options rallying while traders aren't really bidding up S&P options. So it makes me wonder whether traders now think that the realized volatility move has happened and that there's going to be more money in being long in the insurance than the actual price movement itself.
Well, there was a lot of VIX call buying going into year end and the first couple days of January. There was a lot of VIX call buying as insurance buying. But why isn't the insurance paying off more? Not sure. Simply not sure.
A lot of people were piling into those calls today, or I should say trading both sides of those calls. It must be because, again, the VIX not exactly popping. We saw about about 2.4 million contracts going up in the VIX options today. That's a steady 4x their ADV these days, and nearly 4-to-1 calls to puts. I mean, VIX always heavy calls to puts anyway. Day like today, you're going to see more of that. But I'm guessing there were probably a few sellers hidden amidst those buyers, given the performance that we saw today. I'll have to dig into those numbers a little bit more later in the show.
Maybe some people taking hedges off. But, like I said, at Swan, we were dabbling in trying to get into some March getting into some March. And I was like, hey, you seen any March put buyers? And, I asked 3 different brokers, and they're all like, nope. It doesn't make any sense. Nobody's scared. Was everybody already in cash, or is just nobody cares anymore?
Yeah, that is the weird part, because you're right. You get in shows like that, you should have at least a couple people popping up on the radar saying, hey, yeah, we're looking at some March downside as well. What can you get me? And instead, nothing. That's an odd situation for a day like today. Speaking of odd situations, we are also joined, better late than never, by Uncle Mike Tosaw himself, beaming in from scenic and lovely St. Charles, Illinois. Uncle Mike, welcome back to the program, sir.
Oh, always good to be here. What are you guys talking about? Did something happen today in the marketplace?
Apple earnings, they announced them again for next quarter early today.
Oh, got it.
The BBM broke records today.
Yeah, today in the outside of the market with the holdings in Apple and gold, I was kind of disappointed. I didn't have to do anything in Apple or gold today. So
yeah, and I was making my notes for the show today. I made a note like Tusaw's pretty happy today because literally the only 2 greens on my screen, and there's quite a few series here, Mike. Only 2 were Apple and GLD, and that was it. And I was like, wow, it's like Tosaw designed this.
Yeah, I planned the whole thing. No, we had to do a couple of adjustments with our hedges, and so just to kind of add to the VIX and the S&P relationship conversation that we've been having with it. Today's an example why I don't like to hedge with VIX on long-term holdings. I mean, you can trade the pair on it. I don't have a problem with that. But with your larger section of dollars, I think it's important that if you have S&P exposure, you buy puts with S&P. It's a deep-seated issue with me, and I think that today is an example of why that is. Now, is it always going to be this way? No, but this is just one example why I'm a lot happier to have S&P put or SPY puts on as opposed to VIX calls on days like today.
Yeah, I think it's pretty clear so far. A lot of people have been piling into that upside. We've joked many times, VIX upside in February for whatever reason. That's when the crazies come out. Yet they have dramatically underperformed, I think, what the expectations were. Just looking at today's numbers, nearly 170,000 of the Feb 29s went up in VIX. Granted, there's about 220,000 open on that strike, so somebody could have been closing and said, hey, I'm getting the hell out of Dodge. I'm hoping that's the case, actually. But still, it's interesting to watch. A lot of people flocking in, looking to get that quick, we were joking on the last vol views that there is a little bit of gamma to be found in VIX. Usually it's on days like today. Yet today that gamma really was nowhere to be seen. So all these people who are piling into upside in VIX lately have been getting the short end of the stick.
It is. And, just to add to that, I personally, even with the VIX quote unquote underperforming today, personally, I like the idea of selling put spreads below the market right now and as a whole. I think that it's an opportunity to do so. I think we've had a pullback in the market, but granted, I'm the world's most hopeless bull. We all know that. But nonetheless, I think with an opportunity like today, if you have the risk management and you have the ability to do this, I like the idea of selling puts below the market right now, or put spreads, depending on whatever you're looking to do.
And you're talking general S&P, SPY put spreads, not VIX put spreads, obviously. Just want to clarify that out there for our listeners.
Yes, not the VIX. I'll save that for Sebastian's expertise.
Speaking of numbers, it was that day today, of course, the first trading day of February, which means we get a look back at the month that was from an options perspective from the folks over there at the OCC. And it was a decent month overall. They announced today that nearly 390 million contracts went up in February, up nearly 8% in January, compared to January of last year, which was 361 million contracts. Sets the record for the highest Jan volume in history, the 7th highest monthly volume ever. So Jan, traditionally not the strongest month out of the gate for an options perspective, and holding court to this year, actually doing pretty well. But Jan, indeed, usually one of the weaker months of the year. The ADV was up about 8% as well, 18.5 million contracts a day compared to last year's 17.2. Equity options volume also doing well, up about 7.5% from this time last year to about 351 million contracts a day. The ADV for equities coming in about 16.7 million contracts a day, up about 7.5% as well. So overall, not a bad month from an options perspective. And of course, that is kind of to be expected given the fact that it was a bit of a down month for the markets last month, the Dow alone closing down about 5%. The other major indices coming somewhere along those levels for January. So January, not exactly the best month for the market. That usually translates into a strong month for options, and that's exactly what we saw going into January. And looking at the numbers today, there also is a little bit of a announcement coming out after the bell. We got one of Mr. Giovinazzi's favorite names, Take-Two. He loves playing in the gaming sector. They are announcing as we speak. Seems like the name is all over the place. Closing at $18.90 today, down about 1.5%, along with pretty much everything else on the street. And looks like they're inverted right now in the after hours. So something weird's going on there with the quotes. Yes, we'll keep an eye on that one while we keep rolling on into our next segments. But before we do that, anything else, Uncle Mike, Mr. Sebastian, or Mr. Viceroy you'd like to hit on here in the trading block?
The volume growth was retail. The retail firms, including us here, the combined firm, grew bigger than the industry. And I think that question that gets asked a lot is, when is the individual investor coming back? It really looks like SGEN, again, our NOV was terrific. It looks like that individual investor's back because everyone I talk to on the institutional side keeps telling me that the macros still aren't playing in the listed market. And I think it's a testament to, retail embracing it, weeklies. And you can, the weekly coin has two sides to it, in a sense. You could say volume was good, but it was a lot of weeklies. But if that's brought more people in, it's clearly changed the strategy dynamic. But it's nice to see good volume numbers, and it's nice to see the individual investor share growing as part of that business, because individual investor, most of the years I was in the business was about, when I was on the exchange side, about 45-50% individual investor, 40% institutional, and 10% firm. And it's not clear that you have an exact demarcation. Other than firm, nobody really knows retail or institutional without saying we'll filter at 50 contracts, 100 contracts, 200 contracts, and people will argue that point. But it seems like the individual investor has been a bigger factor in the last 3 months or so in the option volume.
So I guess it takes only about a 5% sell-off in the marketplace to get them to wake up and say, hey, maybe I need some options in their portfolio. I think that's what did it. I think that's what finally woke them up, Mr. Viceroy.
I think a lot of things woke them up. I think the good November and December woke them up, and I think in early January there was a fair amount of risk management, and the amount of risk management you could do now in qualified accounts, IRAs, KIOs, things like that, has changed the retail perception. So I don't know if it's a downdraft that woke them up. They seem to be reawakening in the last couple of months of 13. So it's just good to see the numbers on an absolute basis and on a relative basis. And if we ever get the macros back in, we'll be printing 20 million a day every day.
Yeah, I guess it remains to be seen what's going to take it to shake them loose and get them playing as well. 5% can move the little guys. Maybe 10% will bring in the rest of the players into the options fold. Judging by today's activity, the numbers are good, but they're still not perhaps diving in as aggressively as a lot of people may have thought, given everything else that's going on in the macro climate. But speaking of things that are going on, it's time for us to keep on rolling right on into our next segment, the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, that funky tune means it is time once again for the old Odd Block. This is indeed the portion of the program where we break down the weird, the bizarre, the unusual, the just kind of strange activity that we're seeing lighten up the old tape today. And we're going to kick things off with a name I don't believe we've ever featured here on the old Odd Block before. This is Two Harbors Investment Corp, ticker symbol TWO. We talked about Take Two earlier. That's TTWO. Excuse me. This is TWO. Two Harbors Investment closing today, pretty much unched on the day at $9.77. This is the name that does about 1,500 contracts a day. So fairly robust from an Odd Block perspective anyway. And yet today they really lit up the tape with 12,000 contracts going up. The bulk of it in this really interesting trade. We started writing this up earlier on the site, earlier in the session today. Then it seems like other components of the trade went up afterward. We started writing up as just a straight up collar. We saw a bunch at the time. There was 500 of the SEP 910 collars going up for about 17 cents or so. There's really no OI in either of these strikes, six contracts and 25 on the other, so it's all opening paper. And yet the volume continued after we wrote this up to the total of about 3,000 of those collars going up, so a total of 6,000 contracts of the 12,000 just in that one SEP 910 collar. Again, a pretty tight collar given everything else we're seeing here in the old the range of Take Two. 910 hovering right around that at-the-money strike. Then the other component we saw going up today looks like a large trade of nearly 5,000, 4,800 of the Feb 10 calls going up as well. Looks like that's probably closing because there's 5,800 going on that strike as well. And looks like it took off about 4,800 of those. Of course, we'll have to wait and see till tomorrow to see the exact activity on that strike. Looking at the time and sales, it's a little bit mixed early on, but the bulk of the trading does seem to be sales on that strike. So it looks like he could be closing out along here and then perhaps putting on a little bit more concern. Maybe he's an underlying holder and he's putting on a longer-term collar type play. Senor Sebastian, what's your take here on what's been going on out here in Two Harbors Investing Corp?
You know, I don't really even know about one harbor or three harbors. It's a REIT, so probably a dividend type of play. Maybe a covered call dealy, but certainly it looks like that was a close because the volume is 4,800 and the open interest is about 5,800. So I don't know much about the harbors that are two. You know, I know a lot about Boston Harbor. I know about, harbors where I can hang out in a boat. I know about the playpen, but that's about it.
Yeah, you don't see people usually, it looks like it was a closing sale on that strike. Those people usually rolling out a closing sale into a collar longer out unless they had something else going on over there. Or maybe we're looking at that risk reversal in SEP the wrong way. Maybe it was selling puts to finance, buying the longer term calls. It doesn't look like it went up that way, though. So we'll have to dig into it some more to see exactly. But we wanted to let you guys know because it is some weird paper in Two Harbors. I know my favorite name. I watch it every morning when I wake up. All right. Next up, we have some more traditional type odd block paper, which translates into essentially call buying. These aren't really upside anymore. These are more pretty much in the money calls now. We're looking at Powershares DB Agriculture, ticker symbol DBA, closing today $24.96, up about 31 cents on the day. And pretty much this is the name that does about 200 contracts a day, doing about 3,500 today, so fairly decent from a volume perspective. And it looks like pretty much a good half of that paper or so went up in one trade on the March 24th. We saw 1,500 of them, pretty much one big block, going up, buying, lifting offers for about $1.05 to $1.10. There's pretty much no open interest to speak of, so all opening paper actually went up mid-sized blocks. I take that back, so it went through a couple blocks, some of them actually trading through the offer. Looks like, again, opening buys straight up in the money, a little deeper than we usually see. In the money calls here in DBA. But other than that, pretty much your standard bullish play here. We didn't see any stock going up with this one. So it looks like your standard bullish upside / at the money / in the money these days call buy here in DBA. Senior Sebastian, anything to add while I roll on into our next one here?
No, DBA is that's a commodity play. So, it's an interesting one to watch. It's one of the few, if you're looking for if you're one of these diversification people, it's one of the few products that really does not move very much with the S&P 500.
Indeed, an interesting one given all the stuff we've been seeing going on in the markets the last few sessions. All right, next up we have another newcomer to the odd block. This is Seattle Genentics, Inc., ticker symbol SGEN, SGEN. Closing today, $43.30, down about $1.50 or 3.5%. This is the name that does about 1,300 contracts a day, doing about 7,600 today, and about 6,000 of that 7,600 coming in yet another collar trade going up today. We didn't pretty much count on one hand the number of times we talk about collars here on the odd block, and we get two of them in one session. This time we roll on out to June, where we saw about 3,000, about exactly 3,000 of the 35-55 collars going up for about a quarter. The put's over on that, so he's paying for the puts. No open interest to speak of on either one of those strikes. Pretty much, non-existent either. So it's all opening paper. 3,000 contracts went up pretty much in two big blocks. Looks like your standard, again, long underlying holder looking for a little bit longer term protection and not wanting to shell out quite a bit for it. And he's put on a decent collar, a little bit looser than the one we just saw earlier, which was a very, very tight collar. This guy rolling out a little bit nearer term and giving himself a little bit more wiggle room with that 35-55 range, giving himself nice room to the upside and to the downside. All right, and that, unfortunately, is all the time we have for the old odd block. And now it's time to keep on rolling right on into the Express Block.
The Express Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, welcome to the Express Block. This is, of course, the portion of the program where the Viceroy takes us deep behind the scenes over there into the HQ of OX. And as you alluded to at the top of the show, it was indeed a busy one over there. Go figure, with the market selling off over 2%. People may want to trade a little bit. Now, Alex, my minion / little birdies are telling me that there's a lot of stuff cooking over there at OX. You guys are trading pretty much everything. Looks like all the big names, Amazon, of course, Apple. That day doesn't go by without a little bit of Apple going up over there. Qualcomm, which I think is kind of a newer one back into the mix for you guys. And, of course, the OX clients like to gobble up some VIX on occasion as well. Did I hit all the bases there?
Yeah, today everything was trading. I mean, this morning, as I say, the desks were just phones were ringing off the hook. Something I hadn't seen in my 3 years here at the opening. I've seen it at the close, but you had the opening sell-off this morning. Everybody was on the phone. It was literally all hands. In fact, when they kind of got a little breather, I leaned over at one of the help desk guys, and he looked like he'd been in a fight and lost. It was just a difficult opening, a lot of activity. I think a lot of people had the expectation we would rally into the close. In fact, as we were selling off into the close, John Grigas, who we talk about a lot on the show, one of the fellows who runs the help desk, came by and looked at me and said, "Why are we selling off?" Excuse me. And I looked at him and said, "Man, I don't know." But today clearly was a loss of confidence. And, as we said, it was driven by ISM numbers. clearly a flight to quality in the 10-year. I think we're all shocked about what's going on in the 10-year. As Sebastian pointed out, you had a lot of activity in the foreign exchange markets today. But a difficult day. The risk guys today, I mean, I sit about 4-5 down from the risk guys. The risk guys today didn't look that busy, which is kind of good news, because on days when the risk guys are busy, that means you're seeing, margin calls and they either have to adjust the trade or take someone out of a trade. When I did take the headset off today and listen for a little bit, there was clearly a lot of rolling going on, and it sounded like a lot of puts were being rolled lower. Again, as we talk about frequently, big part of our business is premium selling. And after the first few days of last week, and of course the activity this week, you'd be adjusting down. And again, hopefully you have the SMA, hopefully you have the margin to do it. But it was a busy day today, but it was cascades of selling at the opening and continued selling into the close.
That was a weird one on your list, Qualcomm. We don't see that one very often, and it's not exactly the earnings day for Qualcomm. They had earnings last week. So what was going on out in Qualcomm? Did you get any color on that one?
No, but it was one of those where I took the headset off and there were a handful of trades coming in. So, but it's interesting when I try to develop a flavor for the day. One of the things that's hard to develop a flavor for during the trading day is what's going on electronically. The easiest flavor is to listen in on the calls or ask the folks on the desk. Claire sits across from me, Bill sits across from me, to kind of listen in on their calls for what's going on. And it was a name that kept coming up today.
Yeah, I'm looking at it here. It didn't really light up the old tape, from a volume perspective or anything like that. It didn't really move that much today. It just pretty much moved in line with everything else. I guess some big Qualcomm players lurking over there at OX. Well, thank you for that, Mr. Viceroy. Now we're going to keep on rolling right on into the strategy block.
The strategy block.
All right, listeners, you know it, you love it. It's the strategy block. This is, of course, the portion of the program where Uncle Mike gets all fancy, puts on his smoking jacket and his pipe, maybe a deerstalker cap to do his best Holmes impersonation. Comes on down from on high, stone tablets and options wisdom in hand. Now, Uncle Mike, I haven't chatted with my team here, the Minions or the Birdies. I'm just going to go out on a flyer, on a limb today and say you're pretty much going to tell everybody that on days like today, they pretty much should just go buy Apple and GLD, right? It's pretty much, that's about your advice for the day?
I've had years where I've told people the solution to all of life's ailments is to just buy Apple and gold, but
so I was closer than I thought.
There were a couple of years where that's where you just, if people don't like their portfolio, just tell them to buy some Apple, buy some gold. That'll fix all your problems. But no. Today, what I want to go through today is kind of expand upon what I was talking about last week with rolling down puts, how it's the art of doing so and why you do it, when you do it, and that type of thing. Going into this year, I know the S&P or SPY opened at a higher level than the number I'm going to give for this, but because of the fact that when we got people into things, this is the price where it was when we got people into things because we were getting stuff done the first day, that type of thing. But $183.01 is the open of the year for SPY for us in terms of when we were getting people into things on the year. And with it, for some it was a little higher, some it was a little less, but within a few pennies. So with that, going into the year, we have what we refer to as our macro hedge and our micro hedge or finance plays, so to speak. And our macro hedge was that we're long SPY, and we're also long a June 174 put option on SPY. And so with that, what we're trying to do is ultimately have protection, but yet have some potential upside in the marketplace. I remember saying at least once in the past that at some point in December, there had never been a better time to sell than right now. Based upon in the history of the entire stock market, there had never been a better time to sell all your positions than at that point in time. And I was right on that, because of the fact that we were making all-time highs. Now, full disclosure, I also said I'm also bullish, so I was wrong on that part, but nonetheless, you get the idea of where I'm coming from. I'm still a bull right now, personally. I think we're having a little bit of a pullback, and I still have the faith, so to speak. Now, why do I have the faith? Why am I puffing my chest out? Why am I saying that the market is going to go up, or why do I still have this sentiment long-term? Well, here's why. We have the 174 put in place. Because of the fact that we have that, we have the ability to still have market exposure. We still have the ability to look our clients in the eye and say, worst case scenario, you're hedged from 174 on down if we do absolutely nothing. Now, with that being said, if you just buy a put option, then you're obviously asking for trouble from the standpoint of time decay. Obviously, put options aren't free, so we need to find a way to finance them in one way, shape, or form. This year, we made the decision towards the end of last year, earlier this year, or actually the end of last year, that we were going to hedge a little bit tighter than usual. Normally, we like to have our hedge about 10% out of the money. It's a good round number, and typically that has worked for us in the past. But this year, because of the fact that, number one, there had never been a better time in the history of the entire stock market to sell. And number two, we felt that volatility levels were a little bit towards the lower end. We felt it was worth our while to hedge around 5% out of the money this time around, because of the fact that, well, it wasn't that much more expensive to go to 5%, so we might as well. That was the basic logic behind it. We've been doing a variety of credit spreads, calendar spreads, things like that to finance the cost of that put option. And today, the position with which we were in going into today to finance that position with SPY, I believe we opened around the 178 level, or was the where we were earlier in the day. But as of about the middle of last week, we got into the 175, 172 credit spread, bull put spread. For the weekly that's expiring this coming week. And so today, when we got down to about the 175 level, our rule on that is that it's just a basic touch and go. We buy to close the 175s and sell to open the 174s. So with that, we'll still, let's say that we settle above 174 this week and we let it expire worthless, which, by the way, we never do, but let's just say in theory we did. We'll still be able to get approximately 15 to 20 cents on the week based upon the expiration of that put spread. But the reality is that we're profitable on the macro put, and that's one we're going to keep in place for the time being. If we sell off tomorrow morning, my plan is to continue to roll down that put spread, and we're still in the front week cycle right now. If we have to go a further week out, we'll do it. I'd prefer not to. I like to stay in the same front week, but if we have to, we will. So what I want to go through today, folks, is that number one, don't panic. If your long-term portfolio took a little bit of a hit today, even if you're a non-hedging type of person, I've heard that there are people out there like that, but even if you are a non-hedging type of person, I wouldn't be too overly concerned about a day like today on the longer-term front. If you are a hedging person, such as myself, then obviously you're happy that you have the insurance in place. But how are you financing the insurance? Are you doing it in the most efficient manner? Are you trying to make sense of the fact that you can roll down shorter-term puts if you need to, or perhaps you're selling calls? One of the reasons that we got away from the collar going into this year is because we would have to put the short call too close to where the strike price, where the current price of the underlying was, and the collar would just be too tight to justify. It would just be like a nothing position. So that was one of the reasons that we got into selling put spreads this year to finance the longer term puts as opposed to selling calls. We looked into selling call spreads, but selling put spreads was the most viable choice for what we were looking to do. Third message with which I want to give you towards the end of the day today is that what are you going to do if I'm totally wrong? What if the market continues to go down? What if the market continues to go south? What if I am a total pinhead and the bears are coming back? Let's say that the SPY goes down to 169 over the course of the next 2 or 3 weeks. What's your plan for that? I have mine, and it's just to continue to roll down those put spreads and stay long that 174 put as a means of protection. What's yours? So with that being said, that is the strategy block for the day.
Thank you for that, Uncle Mike, and may now return to the mountain from whence you came, unless you want to stick around for our final segment, which is Around the Block.
Around the Block.
All right, everybody, welcome to Around the Block. Those car horns mean that it is time for us to let you know what we're watching, what we're keeping an eye on for the rest of this week. Obviously, the macro stuff is really catching everyone's eye today, at least driving what seems to be the bulk of today's sell-off, even given some of the oddity of the options paper that we noted at the top of the show. But it is indeed earnings time. Let's take a last check-in here at Take Two, one of the bigger names reporting today after the bell. They went out at about $19. Like I said, that 19 straddle going out at about $2 even, and they're trading down about 40 cents right now in the after hours. So it seems like, at least for now, the premium sellers winning out on that side of the fence. But again, this thing could go anywhere before the open. So we'll keep an eye on it as it opens tomorrow and see how this one plays out. Coming up this week, some other names, including, hopefully you got your trades in today if you're trading this one. This is CME. We talked earlier in the show about how the options numbers were looking pretty good. Well, CME reports their numbers tomorrow, and given the note we saw on the option side of the fence, it might be interesting to see what CME comes out with on the futures side of the fence. They are reporting tomorrow before the open, so hopefully, like I said, you got your trades in. They closed today $73.18, down about over 2%, so about in line with the market today, nearly $2. And that straddle going out today, that weekly straddle at about close to 250. So we'll see how that plays out with tomorrow's earnings. We've also got 2 days from now after the bell, we got Disney. A lot of people keeping an eye on them, seeing how the holiday season fared with them. Their big gamble into a lot of big names like Star Wars and that whole Disney Infinity thing and everything else. See how that played out for them coming up after the bell on the 5th. They closed today at almost 70 even, 69.99. And of course, Mr. Giovinazzi's favorite Zynga on the 6th. They've already had a bit of a rally, so we'll see what's left for them after earnings. Twitter on the 5th as well, and of course, our old friend RDN reporting on the 5th. SIBO later on the 7th, and of course GM coming in on the 6th. People keep paying attention to the automobile sector. They were also kind of weighing on the market today. We'll see how GM fares. Mr. Uncle Mike Tosaw, anything else catching your eye for the rest of this week, sir?
No, I'm just curious to see how we react tomorrow. We had a big sell-off today. I want to see if the bulls come in. Including you, sir, the diehard bull that you are. I am. I just, I don't see the Chicago Bears doing much next year, so I gotta go with the Bulls. But then we need Derrick Rose back, I guess. I don't know.
All right, and Mr. Sebastian, what are you keeping an eye on aside from this kind of bizarre paper flow, this bizarre activity we're seeing out in vol land?
I mean, that's the big thing I'm watching, and that's the thing that I think is just blowing everything up. I'm really going to be interested to see what we do tomorrow with the way the VIX acted today. We blew through the 100-day moving average today. The 200-day moving average is right around 1710-ish. So less than 1% away, or about 1.5% away. I'm sorry. And I'm really interested to see whether we touch there. And the way the VIX is acting, it's kind of telling me, plus or minus maybe 1%, we're getting near a near-term bottom. I would be, I'm looking at this as an opportunity to maybe potentially sell some vol. Dipped my toe in a little today, and would probably be willing to do more as time passes. So I think there's opportunity starting to form, is all I'm saying.
Sounds good. Mr. Sebastian, weird stuff cooking out there. Of course, we have near-term or pretty much about backwardation going on in the futures right now. That should, in and of itself, translate to some movement going on near-term here in VIX, yet today kind of underperforming. We saw people piling into upside strikes over the past few weeks. That should also maybe gravitate us towards some of those strikes, not seeing that really play out as well. So you're right. Perhaps you're right. Maybe it is time for a bit of a bottom here, and perhaps the market telling us that. Through these vol numbers, we'll stay tuned to see if that is indeed the case. And last but certainly not least, Mr. Viceroy, what are you watching for the rest of this week, sir?
Well, to Mr. Sebastian's point, we're looking at VIX. We're looking at the 10-year. And in both cases, we don't understand the performance. Shocked by where the 10-year is. We're also looking at the dollar, looking at what happens in the yen. But, the undercurrent here, as I said, the ISM number was very disappointing. ISM is a number that doesn't revise. So the next things you got to look at in the next week or two continue to be employment numbers and capacity utilization numbers. With the disappointing ISM, there's kind of no paving that over. So it looks like it's going to be tough sledding here, at least for a bit. And then again, to Mr. Sebastian's point, if the VIX really starts to expand, that's going to get really, really worrisome.
Yeah, so much for a quiet Q1 coasting into those government numbers and government debates getting into the March timeframe. Already seeing some life in the markets, although perhaps not as much life from a vol perspective as we would have expected. And that is going to do it for us here on the old Option Block program. But before we go, let me check in with each of my cohorts, my partners in crime, to see what they have cooking in their respective necks of the woods that may interest you. Starting off with you, Mr. Uncle Mike Tosaw. What's coming up on the land of the RCM webinar train?
Well, we have a full schedule for February, and it will be posted shortly. But every Thursday night in February, we're going to be having some webinars. Head to www.rcmfinancialservices.com/webinars and check it out.
And Senior Sebastian, what is cooking in the land of the Pitt and or Swan Wealth Advisors?
Well, Swan, we've got Swan Re in full pushing forward, and that's something people should make sure they're on top of. At Option Pit, pay attention for some new product launches this month. I think people are going to be really excited about the new things that we launch. And so start visiting Option Pit on a daily basis. There's going to be something special in the next couple of weeks.
All right, we'll stay tuned for that. And last but certainly not least, Mr. Viceroy, what is cooking in the land of OX education?
Showcase a handful of webinars on Wednesday, February 5th. Three I want to point out. New features and walk limit, and I know we've talked a lot about the walk limit product. We're going to do a introduction to futures webinar on Wednesday, and then a DMI webinar, directional movement indicators, and then a real interesting webinar on Thursday, very timely, risk management in IRA accounts. And again, I know a lot of people sometimes don't have a complete understanding of what you could do to hedge in retirement accounts. Be aware of the fact that in the competitive environment today at most brokerage houses, you can employ lots of remedy strategies and hedging strategies. One thing I'd encourage everybody to do if this market does bottom, stops going down, look at the 1x2 repair trade. I know we've talked about it here. It's especially cool if you've got a large portfolio doing it in ETF options or index options. But we're watching macro issues for the rest of the week.
All right, thank you for that. A very timely webinar coming up there at OX. I know a lot of people are probably scratching their heads right now saying, gee, how can I protect myself in my IRAs, my defined contribution accounts, and those sorts of things. So glad to hear you guys are diving into that. We touched on that a few times in the past on this show as well. Check out the archives, listeners, if you'd like to hear more about that. And of course, if you'd like to make your voices heard here on the old program, you'd like to dive into the mail block every Thursday. A lot of great ways for you guys to join us on that segment, including surfing on over to theoptionsinsider.com. Leave a comment or a question on the show notes for this program. We'll be sure to rotate it onto the show in a coming episode. Or, of course, you can find us on email, questions at theoptionsinsider.com. Just be sure to put question for the option block in the subject line so we know which show to route your question to, or on the old social media, twitter.com/options, facebook.com/theoptionsinsider. A lot of great ways for you guys to make your voices heard on the old option block program. And on behalf of Mark and Uncle Mike and the Viceroy and, of course, myself, I want to thank all of you guys out there in the listening audience for continuing to download and stream and subscribe to this program. And, of course, for writing in such great questions. Keep them up, and we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.